Are the Europeans right to blame what they see as undervaluation of the yuan for the Eurozone trade deficit?
It certainly is a factor. I mean, there's clearly other factors at work as well. But the fact that China is still able to export its goods very cheaply, and to some complaints of dumping excess inventories, excess goods across the globe. But that has kept prices low and obviously helped demand from Europe for Chinese exports. And conversely, it's become difficult for US or Europe to export into China, certainly in goods such as autos, where China's developed its own significant auto industry, especially in EVs. So I think it's not just the currency at work. There's a number of structural factors at play here. But the fact that the yuan, I mean, okay, you can look at against the US dollar. The yuan has actually been strengthening, as you mentioned just before. But the reality is, on a trade-weighted basis, and importantly on a real effective exchange rate basis, the yuan has actually cheapened over recent months and recent years. And in that way, China has actually improved its competitiveness in terms of FX competitiveness, at least.
So the EU-China, that summit was tense to say the least, Mitul. The EU and China are embroiled in a number of fairly significant tariff disputes, whether it's over EVs and counter duties from China on EU's luxury sector. Is this going to be, or are charges of currency manipulation by the Europeans against China going to be effectively opening up another front? Does China have a currency manipulation label on its back by the Europeans?
I mean, clearly that's a risk. And we heard the comments von der Leyen talking about an inflection point in the relationship. It doesn't look like the talks have been progressing particularly well. And as you mentioned, a lot of sticking points. FX is just one of these, but clearly there are grumbles about the fact that the yuan is relatively weak, and that's making it even more difficult for Europe. But, as I mentioned, I think there's a number of issues here that are still at play, and, structural factors. The fact that, European goods now going into China perhaps aren't in the same sort of demand as they were before. Chinese exports, as I mentioned, the auto sector, EVs is something that China has really ramped up. And of course, to the point where it's reduced prices so much because of domestic competition. Again, this involution phrase comes into play here. But that's also caused some issues in terms of relationships. So, it's certainly not going to be easy to forge out some sort of a deal here. In some ways, it almost looks like the US and China are progressing more quickly than Europe and China are at this point.
So can we see more traction and possibly further gains in the yuan against the dollar, given the trade sentiment between the US, as you pointed out, and China that is improving, and ahead of the summit next week in Sweden between the two parties?
I think that's fair to say. And clearly we've had the fixings have been sending a very important signal. The dollar CNY fixing yesterday, for instance, was below 714, very, very significant there, and suggesting that there's a lot of comfort from China for a stronger currency, at least against the US dollar. Part of that, of course, as you allude to, may be due to ongoing or upcoming discussions between the US and China. Obviously sends a goodwill signal that they're allowing that. And look, as I mentioned, even with a stronger yuan against the US dollar, the yuan has actually underperformed other currencies. So from a trade-weighted perspective, it has actually weakened. So China's kind of getting the best of both worlds here. You're getting a competitive currency, but at the same time having nominal strength against the US dollar, which, again, I'm sure the US will like to see.
And the PBOC is in the game as well, isn't it? I mean, the currency has been partly guided by the PBOC in an attempt to boost investor confidence. By that standard, can you argue that the yuan perhaps is overvalued against the dollar, considering the still shaky fundamentals in the country?
Well, I think the risk here is that, export growth has been very strong in the first half of the year, but we could see quite a sharp moderation in the second half. And that means that, again, the yuan may need to start to see some renewed depreciation in the months ahead. It's been fine, as I said, in the last few months. The strong currency hasn't hindered export growth. And in fact, as I said, the cheapness in the CFETs has helped on that front as well. But this can't keep on going on. And we think, in fact, our economists forecast exports growth to moderate to 0% in the second half of this year. That's going to reduce some of the underlying support from the current account on the currency. And we do think that could see renewed pressure, especially if the dollar starts to gain a little bit more ground. And that's the big issue here, whether dollar actually recovers more broadly. But we think most of the dollar selling is done. We think that could also play out against a slightly stronger dollar against the CNY.